Good morning. Today is Friday, June the 2nd, and the time right now in Singapore is 3 minutes to noon. The latest news regarding the US debt limit has come in, and it seems that the Senate has also passed through the bill. Now, both Chamber of Congress has passed through the bill, and it's now going to be sent to President Biden for his signature. And this will come just in time to beat the clock. We know that June the 5th is the date that the Treasury Secretary has actually mentioned, in which the Treasury will run out of money. So it does look like we have averted a major catastrophe here. But at the end, like I mentioned previously, this is not the end, because Janet Yellen, the Secretary of the Treasury, has mentioned that she is going to raise $700 billion in the next few months, and this is going to be an enormous amount of liquidity that's going to come into the market, and this is going to complicate the Federal Reserve fight against inflation, because with additional liquidity coming into the market in the form of $700 billion, that's going to make prices going to be a little bit more inflationary than expected. So do watch out for the Federal Reserve continuing to maintain a tight monetary policy stand going forward. And of course, over on Wall Street, this news will definitely cheer market participants, in the sense that equity market is likely to continue to edge higher, which we have saw yesterday. But so far, the Dow Jones has not really reacted in any major way. The low traded so far as of last week was 32,586, and the market has only seen marginal gain, despite news of the House passing through the bill. And on top of that, tonight we were going to see further reaction to the upside, because now the Senate, meaning to say the full Congress, has actually passed the bill to be sent down to President Biden for his signature. Okay, so this is going to be a bullish incentive for the market. So do watch out for further buying pressure going forward towards the weekend. Okay, and over in the S&P 500, obviously the S&P 500 has been a lot more bullish than the Dow Jones, and we can see that the market has already traded to the year high at 4,233, 4,232.4 overnight, and we see that the market right is now a hair breadth away from the first layer of price range, in which I think the profit taking will actually comes in. That level is 4,240 to 4,340 levels, operating just under the August high, the last August high of 4,325. Now, beyond this level, another layer to consider, in which very likely we're going to see intense selling pressure, is going to be 4,373 to 4,517. So regardless, this will be a lousy level right now to continue to chase the market. In fact, there is the possibility of buying the rumor, selling the fact. So do watch out for a counterintuitive move after the market reacted positive to the upside. The key here is how it closed on Friday, which is today. Now, today we also have the non-farm payroll number coming up, so expect a little bit of volatility. So hopefully we don't have numbers that come in to cancel out the bullishness that we are seeing as far as the debt ceiling is concerned. So do watch out for conflicting sentiments coming in tonight. Okay, over the Nasdaq, we can see that the Nasdaq is getting ready to burst to the upside. The nearest target beyond the 14,712 is going to be the last March high at 15,265. Again, not going to be a situation in which it is going to be incentive for me to go in to buy at this current level. I am a little bit skeptical about this, because I think there's going to be a lot of hype involved. Okay, so do watch out for counterintuitive move. Over in Hong Kong, over in Asia, we can see that the Nikkei has received this news very favorably, although the market has not taken out the 31,560 high, which was last seen on Monday. So this week itself, the Nikkei may actually close on a very firm note, possibly beyond 31,605, which is my original target. So do watch out for that as well. In Hong Kong, we can see that the Hong Kong market has actually burst to the upside this morning, and currently is trading at the day's high at 18,883. And this is definitely something that has been expected. Immediate barrier to higher prices will be at 19,114 to 19,366. So this level itself will be likely to be the first intermediate target here. Of course, I do have expectation that there is a possibility the market may edge all the way back to above 20,000 to test the 20,800 to 21,103. So this will be the ultimate target for me. So let's see whether the market has enough momentum to go that high. Over in the Chinese market, we also see a change in sentiment. Market has stabilized at 3,781. Now it is currently trading at 3,855 on the way to test the immediate target at 3,900 to 3,920 levels. Beyond this level, there is that guarded optimism. The market may have enough momentum to go all the way to 4,076 to 4,117. Those are the current sentiment. So over in energy prices, we can see the energy prices actually rose last night to $71.02 on the back of reduced inventory. So we can see the prices may want to go even higher going forward. But right now the market could find some near-term support around the $69.50 to $70 level. So if the market find a base here, it is getting ready to propel higher to challenge the May high of $76.07, perhaps even into $78 to $80 range. Okay. Over in precious metal, we can also see that metals has been very, very firm overnight in the market, trading high as of now at midday at $1,983.50 thereabout, hitting its immediate resistance left behind by the May 20th high. Okay, so if the market can close above this level, the immediate target will be the $2,000 level, 2006 to be exact. Okay, so do watch out for some kind of resistance within the 2006 to $2,024.50 levels. Okay, do watch out. This area actually will offer rather stiff resistance. Over in the silver market, we can see silver has also been going up, and high traded as of now is $24.02 on the way to challenge the mid-May high of $24.21, which is not very far away from the first target area of $24.41 to $24.82. Again, this area is going to offer some very stiff resistance going forward. In the dollar index itself, we can see dollar practically came down on the back of a news that both the House and the Senate has passed through this debt ceiling deal. So why is the dollar coming down? Remember earlier on I did mention the Secretary of the Treasury has already mentioned weeks ago that she is prepared to raise $700 billion right after the debt ceiling has been cleared. Right now, what we know is that the debt ceiling has not been lifted. It has been suspended, which is even more consequential, okay? Because if from now until the end of 2024, there is no cap, that means to say that technically President Biden can borrow with not a single worry right now. There is no limit cap on him until the end of 2024. So that is technically speaking, meaning to say that there's going to be more dollars going to be flooding the market itself. That is actually a negative for now. So the market is coming down. That is understandable. The immediate bottom for this move here possibly is going to be heading towards 102.50 to 103. But before the market goes all the way there, there's possibly the market may actually bounce a little bit. So later on in New York, let's see whether the market will bounce back to 103.70 levels. I think that it will be an area of resistance for now before the market come back down to 102.5 and 103 levels. Okay. Over in the currencies, we can see currencies have actually rallied very aggressively. Euro dollar has burst through the March 23rd high, the May 23rd high, which is 107.67. The high right now, as of now, is 107.70 levels. So for the time being, do watch out for a possible pullback. If the market does pull back to 106.85 to 107, that level could offer a buying opportunity here for another test of 108.85 to 109.35. Over in sterling, sterling has been very, very strong. It has already hit its target, which I have previously mentioned that my target was at 124.90 to 135.40 levels. The market actually went a bit beyond that to 125.45, and this is an area that possibly it may not be able to hold. Likely the market may see some kind of a temporary high here, getting ready for the next down leg. Okay, do watch out for that possibility here. Over in the Aussie market, I was expecting the black line here representing the support and resistance offer some kind of resistance, but it did, but only for a while as of last night. But this morning it burst through to 0.6615. Now that being the case, the market right now is aging towards my original target at 0.6840. 0.6640 to 0.6680. So this area is actually more conducive to selling. So do watch out for a top here for the market to come back down and test the lower end of the range. So the low so far is 0.6460 so far. Okay, over in dollar CAC has actually plunged through my ideal selling buying area. So now the market is coming back down very aggressively. There's a possibility market may bounce a little bit later on in New York at 134.80 to 135.15 level before the market go all the way to challenge the 133 levels. Okay, so do watch out for all these big move happening in the currency market. Dollar yen has been a little bit disappointing. There has not been seeing a sell-off that what we saw in dollar Canadian. However, the market is still biased to the downside. The low so far is at 138.40 levels. If we do get a bounce back to 139.70 to 139 or should I say 140 levels, so that area will be actually offering a unique opportunity to go short. Target is still at 133.5 levels. Okay, so there's going to be a lot more downside potential for this currency pair. Over in Bitcoin, news of a agreement in the Senate has actually pushed Bitcoin to go down to test the low at 26,519, but quickly rally back up. Now it's challenging the 27,000 levels. I think this market is getting ready to rally. So my original target here is at what 26,430 to 26,860 level to buy, targeting at least $30,000 for now. So this is my outlook for the market today. Now remember, tonight we have non-farm payroll, and that is going to cause a bit of volatility in the early part of New York trading. So do watch out for the possibility. How the market close this weekend is going to be key going forward into next week. So until then, wish you guys happy trading and be safe, and I shall see you again next Monday. Bye bye.